and welcome to this video. Today I want to go with you through five big winning stocks we identified in the market update premium community, and I want to show you the characteristics of the stocks I am looking for, and maybe you learned how to identify such potential big winners. So the first one I want to look with you in the weekly chart is CELH Holding. CELH Holding is a company which develops and produce fitness energy drinks, and it was a big winner here in 2020. You can see that here. So the stock went from almost $7 to $100, and this is the first characteristic I am looking for, and it's a big up move. So I want to see that the stock is really under demand and under accumulation, and you can see here the volume increased here in 2020. So institutions discovered the stock, and now the stock is on the list from a lot of institutions. And and then after that the stock corrected with the bear market here in 2022. So you can see the black line here, that's the S&P 500, and the stock did not crash or move down to the $7 level as a lot of other high growth names did. No, it went sideways. It created a new base. And what does it mean? Well, it means that institutions are holding on to the stocks. They do not dump the stock. They hold on and they eventually buy more. And you can see that here in the weekly chart, in the weekly volume. So the first sign or the first hint here was this big blue volume bar after the volume went down for several months here. And it created something like a cup, maybe a cup and handle pattern. You can see that here. This one is the cup, and this here is maybe the first small handle below the moving average 40 in the weekly chart, which is the moving average 200 in the daily chart. And if you look at the base here, it looks calm, it looks very consistent. There is no big volatility inside the base, and it has a clear breakout level here. You can see that here, a clear breakout level where the price consolidates multiple weeks below this red line, and then when the stock broke out here above that level, this is the first buy trigger when you want to buy into the stock. And of course, at that time here, the stock did not had a 99 relative strength rating, so it did not belong to the top 1% of all stocks tracked by IBD. No, it had an RS rating of, I think, something like 79 or 80, but the RS rating improved over time here. So the stock really started to outperform after I bought that here. Let's look at the fundamentals. Let's start with shares and float here. You can see this one has only 33.9 million shares and float. So this is a low float stock. There is not much out there to buy for institutions, and institutions have to pay more and more to own a big stake in the company. And everything below 50 million is a low float stock for me. Then the stock has very good EPS estimates for 22 and 23. You can see that here, 820%, 113%. There are not many stocks out there which have such good EPS estimates for next year, and the stock is becoming profitable. So you can see that here, they are coming from negative EPS, then the first year positive EPS, then 11 cents, then one down year here with only 5 cents, and then 50 cents and almost $1. So this is a big jump in profits for the company. And if you look at the other ratings here, composite rating 98, accumulation distribution rating A-, so this is a very good rating here. You can see there is some cash flow in the company. The management owns a small stake, which also gives you confidence that the management invests in the owned company. And you can see also that that the number of funds went up here in the last 2 quarters. So they attracted new funds to invest in Celsius Holding. And most important for me, you can see this explosion here in sales. So over 100% sales growth in the last quarters. So you can see here the stock came from 30 million and now they have 133 million sales per quarter. That's a big number, and also big increases here in profits. Yeah, and then after that, the news came out that Pepsi Cola bought a 550 million stake in the company and helped them to distribute their energy drinks in the Pepsi Cola network. And that is a huge potential new sales driver for Celsius. And the best thing is the chart here. The chart always reflects what people are thinking about the future of the company. And when people start to visualize that maybe they find a big distributor, there were already rumors about Pepsi Cola maybe buying Celsius or maybe helping them to distribute. That is already priced in here, and people stop selling and they start buying before you can see this big price explosion here. Do I have any price target here for Celsius? No, I personally use a trailing stop. I let the stock do its thing. I let it move higher and hopefully catch a similar move like 2020 here or 2021. We will see that. So I follow price, and this is also what I teach in my video course and also in the market update community. The next big winner we found was is Clearfield. Clearfield, highly attractive company. Highly attractive because they are helping communities and other companies to get connected to fiber internet, to very fast internet. And this is needed if more people want to work from home, if they want to stream television via internet, etc. And you can see the same thing here. You can see big explosion in 2020. So institution discovered the company and then it stopped going down. So you can see higher lows here in a row, and you can see also something like a volatility contraction before it broke out. And it broke out, and this is important, when the market started to bottom here. When the market started to find a small bottom, then the stock exploded and it moved higher with good earnings and with good earnings from the competitors. Let's look at the fundamentals here. So they only have 11 million shares in float. So this is a very low float stock, and this is why you see this big price moves here, because there is not much to trade for institutions, and they have to pay up. So if you look here to the yearly EPS, you can see good estimate for 2022. There is 11% estimate for 2023. That's not so much, but it's positive. And you can see that they were able to grow their EPS, their yearly EPS in the last years. They're coming here from 28 cents over 30 cents, 50 cents, $1.50, $3. So they had a 10 times explosion here in yearly profits. So this is a company which is very successful in their business. Otherwise, they would not have such dramatic increases here in their profits. And if you look here at the sales, you can see that they accelerated too, from 14% growth to 80% growth, from 27 million to over 70 million per quarter. And also look at the quarterly EPS and the EPS growth. They are coming from 22 cents. They are now at 90 cents. They started with 57% growth and over 100% growth in the last quarter. So this is a big change in the business success of the company. And this is also reflected in the chart. And this is what I am looking for. You can see here EPS rating 99. That's the best rating you can get from IBD. A plus accumulation distribution rating, composite rating is best. Growth rate 52%. So they grew their yearly EPS on average by 57%. That is a big number. Return on equity is very high. Cash flow is okay. Management owns 17% in the company, so it seems that they have a very high conviction in their own business. The number of funds is not so great, so it's hovering around 240, 250 here, but maybe that will change next quarter. And look at the volume here. Look at all the blue bars in the weekly chart. This is what I'm looking for. This is really, this represents the demand from the institutions. They are buying the share over and over again, and you can see that before the big advance happened. Do I have any price target here? No, definitely not. I let the stock do its thing, and I hope that I can catch a big winner here in Clearfield. And by the way, and this is also important, Celsius and also Clearfield are in a group of stocks where the other sister stocks, so companies which have a similar business, are also moving higher. Clearfield is not the only networking stock moving higher. There are different other stocks moving higher, but Clearfield, in my opinion, is the best stock. Let's look at a young IPO. PRVA, we catch this one also here on a breakout from this very nice bottom pattern. So you can see there's also something like a cup bottom pattern here, and we bought the stock when it moved here above this $30 level. And you can see here also all the blue bars which already show you that there is a high demand for the stock and institutions are really buying the stock. So it will have earnings in 3 days, so be very careful with that. But you see in the volume and in the chart that there is a huge demand for the stock. I mean, look at all the blue weeks here. So it had only one down week here in the last couple of weeks. So that shows you that every week the stock is able to close higher, and that shows you there is demand. Otherwise, the price would not go up. Shares and float only 18.5 million. So this is a low float company. And you can see it's an IPO, which it's already profitable. So it maybe will have one down year here, but next year the profits will increase to 24 cents again. So it has great ratings, EPS rating 97. So accumulation distribution rating, composite rating is 99. And this is important. It's not today 99. It was also a couple of weeks ago 99. And this is why I discovered the stock, because the ratings were so good and the profits were also good. So EPS growth rate 162%. That's a huge growth rate for a young IPO company. They also have return on equity. Cash flow is already there. Management owns a stake here, and you can see number of funds are increasing, and they are around 300, which is a good number of funds for a young IPO stock. So, and if you look at the sales growth here, so the sales growth accelerates. It comes from 0%, 20%, 21, 29, 40, 47. So it increases here, and that's a good sign. So they are making more money. They attract maybe new customers and more customers to sell their products. And they already have profits. They already are profitable here in the last quarters. And this is not... this is rare for young IPO companies, because usually IPO companies invest all their money into the growth, and they already have profits and profitable. And when you see that in IPO, a young IPO stock is already profitable, it usually attracts a lot of institutions, because they are looking for profits, and especially in young companies, because young companies can grow much faster. So this is one of the top IPOs in my opinion. Let's look at ENPH. ENPH is also a company which a lot of people know. It's in the solar space, and look at the group. Solar is now number one. I highlighted solar stocks very early this year in the market update community, because I saw that the solar stocks do not break down here. They did not do what the S&P 500 did here, so a correction. No, they went sideways. And ENPH was one of the stocks where I personally was a little bit unsure about. I highlighted other stocks, But ENPH went sideways here and it looks very good. And the more it contracted here in volatility, that means the bars and the moves got smaller and smaller and smaller, the more confident I was about the stock. Because volatility decrease and volatility contraction means that people are buying on every small dip of the stock. They support the stock. And that means institutions support the stock because the small traders, they do not play any important role in the market. Institutions are accumulating the stock here. And you can see same thing here, big increase in the last years. So the company was discovered by institution. It's now in all the funds, and now maybe funds are adding to their position. Look at the volume here. The volume spikes were already there. So they were already there in the consolidation before the move started here. And of course, we bought when the stock broke out above this volatility contraction. So this is not a low float stock. This is a more mature company which already have 40 billion market cap and a lot of stocks in float. That's okay. This is okay. So and hopefully it can move higher after I bought that here and maybe becomes a 100 billion company and not a 40 billion company. So let's look at the fundamental side here. Look at the profits. So they're coming from negative profits here, yearly profits. They started with 10 cents, 95 cents, $1.37, $2.40, and now they are at $4. So they grew the profits extreme and have very good EPS estimates for 2022, 2023. Top ratings again, so A ratings, 99 ratings, so this is absolutely top ratings, and they already had them when the stock contracted here in volatility. EPS growth 207%, so this is a big number. Return on equity is very good, cash flow is acceptable here. Management owns a 5% stake. And you can see also the number of funds increased here from 1,556 to 1,800. So in 1,800 is a number, so around 2,000, which shows you that a lot of institutions already own the stock and maybe support them and have a lot of confidence in that. Look at the quarterly numbers. You can see here acceleration also in sales. So they are coming from negative sales. They are now back at 68%. So very consistent growth here, around 50% in the last quarters. This is very good. They are coming from 178. They are now at 530 million quarterly sales. So this is a big number and a big growth. And also look at the EPS here. They're coming from 30 cents. They are now at $1.11. So, and you can see over 100% EPS growth in the last quarter. So the business is running. Something changed in their business from the negative numbers to the positive numbers again. And it seemed that there is a very high demand for the products from ENPH. And the good thing about ENPH is they are not solar panel distributors or producers. They develop and they also produce micro converters, which are not so sensitive to the price changes which we see in the solar panel business. So, and there are not so many companies out there which produce micro inverters or in general inverters for solar. So very attractive sector from my opinion. Let's look at the last one, CRDO, which is also a young company here in the networking space. So they are doing high-speed connectors, which are used in data centers. And you can see here, after the breakout, they had a 42% week, so a big increase here after it broke out above this bottom here. You can see also the stock stopped going down while the S&P 500 made a new low here. It made a higher low, and this is the first sign that a stock found a bottom. The next sign which attracts me was it did only traded one time below the IPO price. So the IPO price was $10 and there was only 2 weeks here, 2 weeks where the stock traded below $10, and this is very good for a young IPO, especially in a bear market. You can see all this high volume here, all the blue bars, which came here into the stock, and then the stock exploded higher. Maybe it will go sideways a little bit from here, needs a little bit more time to consolidate its gains here, but this looks very good, and it has also the same characteristics I'm looking for when it comes to the fundamentals here. So look at the yearly EPS. They're coming from 2 cents. They had negative years, which is okay for an IPO, and they now have an estimate of 233% for 2024, so 50 cents. Maybe they will earn 50 cents in future. This is very, very good, and I'm always looking for younger stocks because they can usually grow much faster. And it's a good sector, so it's networking, it's data centers, so which is a growing sector in general. They have not so great ratings here. They have not EPS growth rate or return on equity or something, but that's okay because it's a young company and they can invest all the profits into the running business and to grow, and that's absolutely acceptable for me. Management owns a 22% stake, which is a very good sign. You can see increasing number of funds, 140 and 136 here. So the stock finds attraction in the market and funds getting attracted by the stock here. They turned around the EPS numbers at least here for 2 quarters, so they have positive growth here. And also the sales are changing here. You can see that in the last 3 quarters, they had very good sales numbers here. They're coming from 11 million and they are now at 37.5 million and grew the sales by 90% in the last quarters. So, and this is what I want to see. I want to see that a company is growing fast in sales and hopefully in earnings when they have earnings. I want to see that institutions accumulate the stock and are willing to support the stock even when the market is going down. And I want to see that the stock is in a high potential sector. So that means that they can also grow in future, that they have growth potential in future, can expand into new markets, can also drive up the sales and also the earnings with new markets, new customers, and maybe new products and services. So that's all. I highlighted 5 stocks we discovered in the market update community. You can also learn all this basic stuff, how I discover all the stocks and what I look for in my video course, The Growth Traders Toolbox. You can see that at julian-komar.com, or you can follow me at Twitter, YouTube, and all the other social networks to stay connected with me. Thank you very much for your attention.